You're watching the NWR Virtual Investor Conference, May 2020. Up next, we have Tietto Minerals. Tietto is focused on growing gold resources at its 2.2 million ounce Abujar gold project in Côte d'Ivoire, West Africa. The company is on track to deliver an updated mineral resource for Abujar in Q3 2020 and a pre-feasibility study in Q1 2021. Mark Strizek is on the line today. Mark is Tietto's Executive Director. He has more than 20 years of experience in gold exploration, resource development, and operations of open pit and underground projects. These range from the Kalgoorlie Super Pit to high-grade projects such as Frog's Leg and the Eastern Goldfields, also in WA. Prior to joining Tietto, he was CEO of ASX-listed Vital Metals and has been involved in project development of mineral, coal and petroleum resources in both Australia and Papua New Guinea. Over to you, Mark, with Tietto.
Thanks, Laura, and hello, everyone. So, look, we've got a fair bit to go through today, and I guess if I leave you with anything, it's really this headline: rapidly growing, shallow, high-grade ounces at Abujar. That's really key, and so I'm going to walk you through the presentation. We've got a lot to cover. I'll talk about where we've come from, what we've achieved, and also about the future prospects, because we think we're onto something that's really special. The picture on the slide there that you can see is our drilling team. We've got 5 drill rigs, and that really allows us to control our costs and drill incredibly cheaply compared to some of our peers, and that's some of the keys to our success. Just heading on to the next slide. So that's a forward-looking statements. Look, as I said, we think we're onto something very, very special. So look, I'd encourage you to do some research on us and have a look, because we think we've got a very bright future. So in terms of the project, this kind of summarises what we've got and what we're doing to grow the resource. So you can see there on the left, on the bottom, 2.2 million ounces. That was released in November last year. It's 600 metres or so of very high grade from surface, and you can see some of that. That's shown by those intervals of gold gram metres, and we've got some absolute crackers in there. 7 intervals at 200 gold gram metres, 14 at 100. So in the presentation, I'm going to show you where some of those sit, and we've got some that are very, very close to surface. So that's key when you're thinking about payback, is getting very high grade through right at the start. Now, once we delivered that resource, we started straight away into a 50,000 metre drill program. We're around about 30,000 metres of that completed. And I'll show you how we're managing to deliver these drill meters at really some of the lowest costs that you'd see for a resource company. And that's because we've taken that in-house, and we've got a fantastic team that keep on lifting the bar in delivering very, very low cost, high quality meters. So the milestone to look forward to this year is a resource update. That's going to be in Q3 of calendar year 2020. And we have the funding in place to deliver that. And we've got a clear headway well into next year as well. And the key that we see with that 3 million ounces is delivering, as we say there, a gold camp of scale. And I'm also going to show you some of the substantial greenfields exploration that we've got. We've got a very large tenement holding with lots and lots of upside. So just looking at who we are. So Dr. Kang Wang, he's the founder, just came through the 10-year anniversary since when he registered Tietto. And obviously Francis, founding chairman of West African Resources. Paul Kiddo, Ampella, and latterly with Newcrest. Myself, as was said, and Hanjing working. I guess the key really is, we've got the skill set to cover taking a junior right through to development. Getting that funding, the engineering, the geological, and operation nous in there. Research, we're covered by Paul Howard, Harley's, John Bishop, Uroz, Argonaut, Matt Keane. So I'd encourage you to have a look at some of that work and get their view on what we've got. Cash, very important. We've got just under $40 million. And look, we are all shareholders in the company. As you can see there, 9.9%, and we put our hands in our pockets to buy shares and participated in the recent raise as well. Côte d'Ivoire, if you're not familiar with it, it's certainly an area with, it's got some fantastic potential, but it's also got some great infrastructure and government support. Look, I liken Abidjan to, it's almost like the Venice of West Africa. It's a very sophisticated city with all of the right kind of infrastructure you need to develop projects, power, highways. Sometimes you fall asleep in the car and you wake up, you think you're back in Australia. Importantly, you see there, fastest growing gold production country in the region. So there's a real commitment to get projects off the ground. And we're seeing that with Perseus, with Sissingué and Yare, which will probably come online later this year. So, and very, very attractive fiscal terms as well. So this is a really important slide, where we've come from, and really was Kagan getting early on the ground, building up relationships. And you can see we had up to 20 or 30,000 people working at Abidjan. So it was a very, very big artisanal field. They're all gone now, and there's probably only a couple of hundred. But what it allowed us to do was to shortcut that normal exploration process. So Kagan was able to get the ground granted in 14 and 16, delivering his first maiden resource. So it's allowed us to move very, very quickly. Some more slides there, just showing some of the workings. Some of them are in Gramina. That's some targets that we've got coming up. So this is a little snapshot on the project. What we've got, as I said, got a high-grade core, 2.2 grams a tonne at 1.4 million ounces. That high-grade core is driven from around this area here. You can see that arrow pointing into that box. That's what we call AG. And then we've got APG. So you can see already the development of a satellite kind of operation, mine camp scale. And that's 70 kilometres of strike. So we've got lots and lots of targets that's ahead for us to go and test. Metallurgy, I'll just show you there some of the key points, and we'll explore that a little bit more lately in detail. It looks absolutely fantastic with very, very high grade recovery. 5 company rigs, and we're drilling at costs around about $35 a metre. So that's extremely, extremely competitive. Just drilling down onto the high grade core, showing where the majority of the ounces currently come from. So this is the area here that really is of interest, because you can see there that you've got these intervals of high grades from 15 to 29. These lines are on 100 metre spacing. We've already taken some of the resource down to 50 metre line spacing, and that's indicated. So you can see roughly half of that, that high grade core is indicated. And that's about having confidence in what we've got. Another key characteristic to look at there is the ounces per vertical metre. So it looks very attractive for development. Showing a little hit slide here of where some of these high grades. Key takeaway is that you've got high grade very close to surface. So that's very important when you're thinking about development and early cash flow. This is a long section, and just reiterating, just really bringing home those points is seeing that those high grade, these 7 intervals that you can see, the 200 gold gram meters, and you can see that that's roughly 600 meters of strike right outcropping at surface. So, you know, that's very, very attractive. And, you know, realistically, we've only just started to begin exploration here. There's lots and lots of potential underneath as we've continued to drill, recently released some results today. And the system is very large and it's all open at depth. Just showing you a little bit more where some of that takeaway there, the indicated model, you can see there. So that's about the confidence in the resource. So indicated is allows you to start making economic assessments, and we'll be looking at doing that. And I'll show you when we're going to do those the times there. So takeaways there is that, again, is that high margin open pit operation due to those high grades being very, very close to surface. And with the drilling, there's still significant potential to add close resources with drilling. And obviously with the drill results we put out today, you can also see that the system continues to grow. There's a fairly busy slide on this, and you know, I'll let you, you know, follow up laterly, but you can see there the potential of those really high grades close to surface, multiple lodes, and having some exceptional potential for high grade, 21 metres at 13 at depth. So, we've got a fair bit of work to do. This is APG, which starts around 5 kilometres away from AG deposit. It's oxide, it's lower grade, but has a potential for a fairly good margin, low cost satellite mining operation. We're currently infilling these areas here, so we expect this resource to grow as well. This just gives you, I think it's a great little slide, just showing the multitude of targets that we've got, over 23 targets. We've got the resources, all of the current resources are open and we're still exploring and developing them, but we've still got a whole lot of targets on this eastern and western shear to go after as well. So it's really, that's important when you're thinking about future growth, and really we've only just begun on this one, so lots and lots of upside and potential. So this just provides a little bit more colour on the targets that we're currently testing. AG core, that's at high grade. We're just looking at extending that from surface and down. We're already down to 400 metres, down to about 460 metres. So it continues to grow. We've got these AG south, these linkages up through here, so still growing that. And then GG link is a new target that we're currently testing. And APG, as I said, we're doing step back holes down there as well. I think this slide really kind of hammers home just how underexplored it is. You can see the AG core there, that's still open. We're chasing the southerly plunge. And then we've got lots of targets to go after, both to the north, in the middle, and in the south here as well. So lots and lots of work to keep us busy. Some of the new targets, that's just showing some of the workings at Gamina. We haven't drilled yet. And we've got a small bridge just in the north there to put in, and that'll be completed next week to allow us to go after the GG link area, we call it, in Gamina. Good little slide, this one. We've certainly, from IPO, we've delivered in our promises in growing the resources. And you can see there from October, we're putting in 50,000 metres. And you can see the scale of the jumps that we're making in our exploration program. So we expect to deliver quite a healthy number in September this year. So I'd expect it to be substantially above that 2.2 number. This just provides some detail about the drilling, and you can see we're achieving excellent production rates. And it's been one of the keys is that we've turned the industry on its head, taken that in-house, and just really controlling our costs and allowing us to, as it says there, drill our dollars further. So that's an important differentiator between ourselves and our competitors. Metallurgy, it looks absolutely fantastic. This work's being done for a PFS, and some of it is also going to be able to take us through to DFS level. It's being done to a very high standard. The important points, gold recovery, the gravity looks absolutely fantastic. And you can see that compared to some of our peers. We've got an analysis there with other projects, up to 80%. Very, and that gravity is important because it's low cost, it's very cheap, it's very simple recovery. So we'll have a very, very simple plant. CIL recoveries are phenomenal. So we're doing optimization test work right now and be able to firm up all of that work. We've also released physical test work, and they look absolutely fantastic as well. Importantly, our energy costs to grind and mill our fresh material looks to be up to 30 to 35% less than our peers. We're almost sitting at oxide levels. So this is going to be very important to remember, a low cost, very simple operation. So it looks very, very encouraging. Next slide. This is the environmental work. So we're on the ground right now doing these important long lead baseline studies. We're working with an Ivorian group, Envitech, and we've also appointed a specialist, Luke Stevens, who worked with Newcrest and a number of others to make sure that the work will be done to equator principles. So, we're on the ground doing all these long leads because we've got an eye to where we think we can take the project. So building some of our local networks, we've been working with the local communities since for over 5 years in providing both employment and also whenever we, cash and so forth in the form of, working with farmers if we disturb any of their cash crops. So there's been payments, these payments have been going for over 5 years. So we've got a very, very good relationship and the local communities are, there's no real large local community on the mine site, so it looks very good for development. But importantly, they're very, very aligned with us in taking this project forward. So some of the milestones, the catalysts, as we said, look, we're continuing with our drilling, the metallurgical studies, Q2. So we've got an eye out onto the resource update in Q3 and getting that PFS done as well. So that's things to look forward to. And in the meantime, lots and lots of news flow. This slide is a pretty useful slide. This is from Hartley's, and I think it provides some good information there as to how the project looks compared to peers. And it's an assessment of the aggregate, the intercepts, those gold gram meters and where it sits. And you can see this measure of projects that are likely as standalone, and AG Core sits there, and it kind of provides some confidence that how we feel about the project is able to be assessed independently by Paul and the team at Hartley's that are always looking at projects. So it's a great little slide there. So look, I think I'm probably ahead of time a little bit, but wrapping up, you know, some of the key points really is that, again, it's that, as I said, try and remember the shallow, high grade, it's growing. We've got a fairly significant resource already, and we think based on what we've seen with our aggressive drilling operation, we're able to grow that further. We've got continuous news flow. You know, I think our record stands as that we're always getting results out at least 3 or at least you know, a couple of months, or if not more. And you know, this drill program, it is high impact and it's certainly low cost. And you know, our team's doing a fantastic job. Now, I talk about the metallurgy as well, I only touched on it briefly. Key takeaways are that it is looking to be a very simple, low-cost plant with high gravity, which is very cheap. And also the cost of grinding and milling looks to be around about 30 to 35% cheaper than some of our peers. So right in line from our fresh, looking like oxide. As I said, you know, we're all shareholders, so we're very aligned. We've got a fantastic supportive shareholder base. We are funded as well right through to next year to get all of the studies done. So you know, as we look at taking this project forward, you know, if you want to be a shareholder, you've currently got to buy on market. So it's a great position to be in. So look, I might end it there and throw it up for some questions.
Thank you so much, Mark, for that presentation. Some questions have come through over the last 20 minutes or so. What is the scope to treat the 3% or in the first 1 to 2 years of production?
Right, so I think that's, if I'll whip back to the long section here and just show you the, you know, where, you know, how we look. One of the things that looks so exciting is this potential here of this high grade at surface. So obviously, look, we've got to work through a PFS and so forth, but just looking at the numbers and those intervals of those high grades at surface, you can really start to see the makings of a very high grade, you know, +3 grams kind of starter pit. So it looks really, really encouraging. So I think the signs for us are very, very positive there. You know, it's the fact that it's at surface, it's high grade, some exceptional numbers, and it's got a strike width there of almost a length there of almost 600 meters. So it looks good.
Okay. And would that give an initial gold production, do you think, of 200,000 plus ounces per annum?
Well, look, we need to do the work to quantify that, but based on the sort of intercepts we've had there, we think that could be possible, and that's a target that we've got internally. We'll need to do the work to prove that with the PFS, but based on the drilling results and where they sit, you know, we think we've got a great chance.
Mm-hmm. What's your timeline to production, and how much capital do you think you'll need to get into production?
Right, so look, we've got to get through a PFS, as we said, looking to deliver that Q1, the work we're doing there. So, I mean, I think the key, it's probably a little bit ahead of where we're currently sitting, but we can point to some fantastic analogues with West Africa and so forth, and Perseus. So, you know, the guys have been able to deliver. Let's take Richard Hyde, West African. You know, they've been able to deliver under budget and for around about, I mean, I think the plant there was relatively cheap. I mean, the Lyco guys are building, very, very cheap plants. So the kind of numbers we're thinking could be between, 120 to 150, $200 million based on what we've seen in the market. I mean, we're hopeful that what we've been able to do with our drilling company, we could do to, building a plant, be able to, challenge some of the orthodoxies. That's what we do. We really look at, because we're shareholders, how we can reduce costs and still deliver a great product.
Mm-hmm. Mark, what numbers do you think the project can do in the first 3 years of production? I know there's a lot of questions around numbers here and specifics.
Yeah, look, it's always difficult without having the studies, but bringing it back to this area through here, the size of the resource in there, the fact that you've got over 600 metres of strike or more, and with those really high grades, and then the fact that it continues down at depth, it really looks like we could support quite an attractive number. And I think the headline number, if you're looking to try and land, is somewhere in that 200,000 ounces. Further work required, but I mean, I think the signs are good that it could be something that we could deliver for a number of years, based on what we're seeing there with the style of mineralization and the fact that there just is continuous high grade hits on section after section, and they continue from surface right down to the bottom here. So I think that's the key, is probably as best as I can answer right now with having those kind of studies.
Mm-hmm. And as best as you can answer, perhaps as well for this one too, the all-in sustaining cost, would you say it's similar to West African resources, or is this ore easier to process than what they would be dealing with?
Well, look, they've got some exceptional grades coming out of the pit, and we've probably got some advantage in terms of, out of the high grade structure there. I think the key, look, I think they're great targets to hold up, and we'll be doing our hardest to make sure we could deliver something in those kind of ballparks, because I think the resource is demonstrating the fact that it's got a lot of metal in there, and a lot of high grade, and look, it's a target that we're chasing, and I think we'll be able to deliver some very nice numbers as we work through de-risking the project, getting that resource out, and then following up very quickly with a PFS.
Quickly before we go today, Mark, what are the tax requirements for producers in Côte d'Ivoire?
Right, so that looks to be pretty attractive. They have a 25% corporate tax rate, so that's pretty good. But there also was a 5-year tax-free holiday on new production. Our understanding is that that may be under review, but at this stage, it's something that we would definitely be negotiating with the government to try and see whether it could be 5 or maybe it could be 3 years. I mean, the statute says it's 5. There is there was some discussion in Parliament saying that there was going to be some changes, but currently, look, it's still, regardless of where it sits, it's a very, very attractive destination for mining projects, as seen by there's been 3 new projects coming on very quickly recently.
Yeah, it sounds like it. Well, thank you for joining us today, Mark. It's great to hear from you.
Thanks very much. And if anyone has any questions, feel free to get in contact and send us an email or give us a call. Yeah, it's great.
Great to hear. Good stuff. Thanks, Mark.
Thank you. Bye-bye.
Thanks, everyone, for joining us on the call. Next up, we do have Tietto. Stay tuned. They'll be up in about 5 minutes' time. See you then.